Let's speak about some low risk, high reward SPACs, my friends. What is happening, investors? It is your boy Jack. I am not a financial advisor. I got the clothing line to prove that fact. I took 2 days off, and boy am I excited to be speaking with you guys again. So yeah, we took a couple of days off, we chilled out, we did some normal things, but let me tell you guys, I missed looking at the charts. So today I want to come to you guys with a banger video. Today I want to show you 3 different SPACs, all that have limited downside, aka low risk, and unlimited upwards potential, high reward. The thing about SPACs, my friends, is they essentially have a floor of $10 a share before any merger happens. So for example, if you buy a company at $11.66, the most you can possibly lose per share would be $1.66. If you bought a company for $10.45, the most you could lose would be 45 cents a share. Now it is possible that a SPAC goes below $10 a share once the merger has gone through, but before that it can't, because you can actually redeem all of your shares of that particular stock for $10 a share before the merger happens. Now if you're on Trading 212 like I am, you can't do that, so you will have to manually sell out if they are to hit $10, but I'm fairly sure with Robinhood and Webull you do get that option. So right before we do get into the video, my friends, right before we get into 3 juicy companies that have a whole lot of upwards potential, can I please ask you to hit that juicy like button? The YouTube algorithm is probably not going to be my best friend since I took 2 days off, so it really would mean a lot to me. And on that note, please drop me a comment down below, they help me out massively as well. And if you are already new around here, hit that juicy red subscribe button, my friends, why not? Just join the family of investors. Also, if you're interested, please hit the first link in the description and you will sign up to my private Discord group. That is a community where you will find out everything that I am buying and selling in real time. You will join a community of over 600 investors. Again, you get my buy and sell alerts, you get access to over 40 private channels, so much valuable information in there. And if you want 4 free stocks, all you gotta do is hit that second link in the description, sign up to Webull and deposit $100. 2 of those stocks are valued up to $3,700. I mean, you could pay for Christmas off of those free stocks. But anyway, my friends, so the first company of today, I'm starting off with these guys for a reason, because we've spoke about them on the channel before, and I actually am invested in these guys. So it is VGAC, okay? It's Richard Branson's SPAC, and we do not yet have a merger target confirmed. We have speculations, but we don't know who it's actually going to be. So right now, you literally are just investing in the management team. And so this is a company that I bought exactly because of what we're going to speak about today. There is limited downside and there's unlimited upside. So if you're like me and you're very cash heavy, which I know a lot of people are right now, okay, you can buy a SPAC, okay? I bought these guys at $10.62 a share, and I bought 300 shares, you know, so already, what, we've made $300 there. The most I can possibly lose is 62 cents for each one of those shares, less than $200. And if these guys were to even go up to, let's say $21, I've made over $3,000. And I mean, how many times have you saw a SPAC go up to $20+, my friends? A lot more often than you will ever see a SPAC go below 10. That happens very rarely. So if you get into a company early enough, as I did, at 10.60, I mean, if you get it right once every 15 times, you're breaking even. Now obviously if you're buying in now at $11.60 or maybe $12 a share, I mean these guys were up above the 12s, it's going to carry a little bit more downside, of course. But it's about finding that nice healthy balance, you know, it's about trying to get in nice and early. So this is the first one. Now I'm not going to go too in depth here guys because I have a full video on them, but essentially we should be merging with a very exciting looking company. And the SPAC is going to be worth about $480 million, so we can look towards a big company. It doesn't have to be someone really small, it doesn't have to be someone not established. This could be a company who's making profit as we speak. And of course Branson himself is on the management team. Now one important thing to understand here is that this SPAC will focus on finding businesses from Virgin Group's core sectors, okay, which could be travel, leisure, financial services, health, technology and renewable energy. So an awful lot of different sectors, but what we're hoping for, what would more than likely be best case scenario, is something in renewable energy or technology. That could be an EV related company. But these are the 2 kind of ones that we're hoping for. If these ones are to happen and if it ends up being a really good company, we could make a whole lot of money here. And then worst case scenario, we lose 60 cents a share. Not really the end of the world, is it? Now, if you look at the price action, it's actually decent. We went on a little run up initially, we came back down, filled in a gap, there was some sideways, we moved up, and now we're trading sideways again. Now guys, worth understanding, this isn't a company that you can expect to shoot up 50 to 100% without finding out who we are going to be merging with. A lot of the times when we speak about a SPAC or we invest in a SPAC, we already know the company we're merging with, and that's the catalyst. That's why it goes from 10, maybe $11, $12 up to 17, 18, 25, 30 we've seen. You are investing early on in hopes that we do decide to merge with a relatively good company. Do keep in mind though, if you're buying these guys at $11.70 a share, you're essentially risking $1.70 a share. Now we actually have a pretty weird one. So This is one I've had my eyes on for such a long time. We spoke about this in the Discord for a long time. I know a lot of people got in literally at 10 on the button, essentially risk-free. Mountain Crest Acquisition Corp. Now, who are these guys merging with? They will be merging with Playboy, my friends. Playboy of all people. Now, I know a lot of people are thinking, surely you don't plan on investing in Playboy, because they have changed the way they work quite a lot over the last while, okay? And look, they've agreed already to a $381 million merger. So again, quite a big merger, my friend. I'm surprised this stock has not moved more than it has. So you can see right now it's at $10.45 a share. Pre-market, it's all the way up at $10.95. So let's even say you get in at $11 a share. You're risking $1 a share for however many you buy. If you buy 1,000 shares, you're essentially risking $1,000. And if they go up 100%, you're making about $10,000. Now, obviously, none of that is guaranteed. Again, when the merger happens, they can go below 10. But if you sell before that happens, you're okay. Now, this deal is seen closing early in the first quarter of 2021. So it could literally be closing within the next month or two, my friends. And I will be surprised if there isn't some sort of a run up here. Now, this is different than VGAC because we know who they're merging with, okay? So you can actually go and research this company. You can go research Playboy. You can look at the financials. You can look at how they've performed over the last while. And you can decide that either you're happy or not happy at all with the company. So the pop may not be as big as VGAC, for example, because we don't know who they are merging with. If it comes out as an incredible company, the pop is going to be huge, but if it comes out and it's underwhelming, there's not going to be much of a pop at all. With that being said, if you're buying these guys at $10.45 or even $11 a share, very low downside. You can see here, Playboy has overhauled its business in recent years with a new focus on sexual wellness, lifestyle, and gaming. Now, these guys were public in the past, but they've been private for about 11 years. So Playboy is huge. It is a brand and platform that could not be replicated today. And I mean, it does have a massive name. It has a global reach of more than $3 billion in global consumer spend and products sold in over 180 countries. And to limit dilution, Playboy has agreed to purchase 700,000 of the Mountain Crest shares at $6.35 a share, getting a very good deal. Now, they've agreed to a 1-year lockup, subject to a partial release if after 6 months the stock is traded at $14 for 20 out of 30 consecutive days. And it's been agreed that $50 million worth of stock will be sold to institutional investors as well. The company has more than $400 million in cash flows that are contracted through to 2029. And they're on track to boost revenue 68% in 2020. So just don't think about these guys as what they would have been 10, 15 years ago. They are trying to rebrand, and it could end up being very good. So I am not in these guys yet, okay? But at these prices, I am heavily contemplating doing so. Similar to what I did with VGAC. Just putting some money in there, understanding the risk that it carries. And, you know, it may work out for me. What I will say, though, is we've known about this for a considerable period of time now. I mean, and you can see that not a lot has happened. There hasn't been a very big reaction to this company whatsoever. So do be aware of that. That's part of the reason I haven't got involved, but patience may well be rewarded. And the last one, save these guys for last, because you can see they're at $12.30 a share right now. So there is a decent bit of downside. $2.30 a share. But we do know who these guys are merged with, okay? And it's this company right here. ELMS, Electric Last Mile Solutions Inc. And on their page you'll see, creating a new world of EV possibilities for our customers. We are a new US electric vehicle company transforming commercial delivery networks for the e-mobility businesses of today and tomorrow. Our technology is designed to deliver the most reliable and most efficient electric last mile solutions, combining integrated deep data analysis, customization, and sustainable engineering. They're essentially looking to provide the lowest total cost of ownership with their electric last mile solutions. Now, if you scroll right down to the end, you will see they are taking pre-orders now. So they're not necessarily established, and that may be part of the reason why they haven't gone on this huge run as of late. I mean, oftentimes, if there's been an EV SPAC, they've just gone to the moon straight away. There is a lot of competition in, you know, the last mile delivery space. There's a lot of companies who have gone public there recently. I mean, not just Workhorse, but look at people like Arrival, for example. There's a lot of competition from names that we already know of who have massive contracts. So that may be part of the reason why these guys have not gone up quite as fast, but I do still see quite limited downside with an awful lot of upward potential. And the pro forma implied equity value of the combined company is approximately $1.4 billion. So again, quite a large company to be going public via SPAC. Now, something to notice, okay, they expect to launch its urban delivery van as the first electric class 1 commercial vehicle in the US market in the third quarter of 2021. Still quite a way away. They have a $155 million pipe and approximately $379 million of gross proceeds expected from the transaction to be used to fund operations and growth. Now, I can tell you guys right now, I'm obviously interested in this company. It's one of those ones that, you know, it's in the EV space, it's in the last mile space. Of course, I'm going to do some more research. And I will probably make a full video on these guys very soon, letting you know what I actually think of the company. But for the sake of today's video, this is an EV stock going public via SPAC with a $2.30 downside as of right now. Quite a lot of potential here, I'm going to put it that way. But please do remember, all of the companies we're speaking about today, there still is a risk, there still is downside. Every single one of them could go below $10 by the time that these mergers go through, but there is a whole lot of upward potential. We've seen how well SPACs have done this year. I think a lot of you guys watching will agree that we've made a lot of money on SPACs this year. I mean, if it wasn't for SPACs, my portfolio wouldn't be looking half as good as it is right now. But anyway, my friends, there are 3 exciting SPACs that you guys can go have a look at. You can go do some more research into if you want to, because all of the companies, VGAC aside, because we don't know who the company is, they're quite exciting. If you watched all the way till the end, you, my friend, are a true legend. I really do appreciate you being here. I appreciate your continued support. It genuinely means the world to me. When I took those couple of days off, I really did have some time to think, some time to reflect, and I just realized how lucky we are, you know what I mean? So I do want to just thank you all so much for putting me in this blessed position. If you enjoyed the video, maybe appreciated it, could I please ask you to hit that like button, drop me a comment down below and subscribe if you're new around here, because that all does mean the world to me and it's all free. And if you are interested, please do hit that first link in the description and sign up to that private Discord group. I promise you, it's full of juicy value. Lots of money has been made in there, I'll put it that way. And if you do want those free stocks that we spoke about earlier on, just hit that second link in the description, my friends. But thank you all so much for watching. I hope you have an absolutely fantastic day. I will see you for another video very soon. Peace.